Yes, indeed.
All right, peoples. Welcome to another swing trading discovery video, I guess you could call it. So I've gone ahead and now updated basically the same thing I did with the early 2019, and I'm doing it for August 2018. Essentially, near the end of July through middle of August, all of August was a very flat month. So what I wanted to do was sort of have three comparisons. So one being when the market was doing well. So in this period of time, early January, the market was up 4.3% over this period of time. August is going to be sort of the break-even month. The market was down 0.5% over this period of time, close to break-even. And then this that I'm working on now is when the market is crapping the bed hard. So this is between early December and December 21st. And during this time, the market was down an average of 2.5%. So this includes some early January, because if you get into some of these late December stocks, by the time we got into January, the market was starting to pull up again. But overall, minus 2.5% is fairly terrible for the market within a period of time. And I've plugged in the stocks, I've plugged in the market averages. Now I just actually have to go through each day for each stock and plug in the results day after day. Not making any conclusions yet. The one trend I've seen for sure is just that it's good. Like these stocks performed 0.9% better than the market average during this time, starting the day after the big win, the big profitable day. That's in the winners department. In the break-even department, these stocks outperformed the market by 1.1% over this period of time, which is again another massive thing. And we're going to see, obviously, with the market being so deeply down during this time, I'm not expecting the stocks to be making profit per se, but if they can lose 1 or 1.5% when the market's losing 2.5%, that'll be a win. And then I just got to dive in and determine if there's any advantage to jumping in, beginning a market the next day, or waiting a day, or even waiting 2 days after market close to jump into these stocks once they hit. But I'm feeling confident. I think I'm very close to being able to actually start putting some money back into the market. So we'll see how she goes. All right, I've completed the December big winners. I sort of did it in two parts. I did all the way to the 21st, I believe, and then I added in some extra numbers because there was just a lot of dates where the market was doing so bad, there wasn't enough stocks that were meeting the criteria in order to get enough data. And it ended up, even though the market had a pretty good downswing, because I used some of the later December numbers, it ended up pulling up the average to just minus a quarter on the market. And the average win of the stocks is 0.38. So that's, where's my math here? It's a 0.63% difference, which of the three I reviewed, the August being a 1.1% difference, the January being a 0.9% difference, and then this one being a 0.63% difference. Now just to show you, I'm going to remove these ones, because these are the ones sort of after the crash when it started to recover. And you can see how significant that change is. You can actually see that the averages for the stocks are down 3% compared to the market of 2.37. And then when I undo that and the market starts to recover, obviously the winning stocks recover quicker than the market. So what I probably have determined, or is likely, is that when the market is down overall, the winners of the day are not necessarily going to compete that much better, if at all better, than the rest of the market. But when it's recovery time, the winning stocks will recover faster and better. So I'm going to essentially take these three graphs here. I'm going to take the compilation of all of these, and I'm going to just verify that I don't see any advantage to not getting in right after the big day, because that's what the stats are based on. So just to sort of take the day after the big move, the second day after the big move, let's compare those real quick. So on the December, we averaged minus 0.55. Let me just make sure that number is right. And the market averaged minus 0.50, so it's almost bang on. And then the next day we averaged, let me make sure that number is right, almost nothing, basically break even. So in the first 2 days, there's very little difference between the market and the average here, so I don't see any advantage or disadvantage on this one to coming in any other day. August, let's look at our numbers, make sure that they're right. I just want to double check these. The next 2 days, that's right. That's right. So essentially very similar. We're down about 0.2% and we're up about 0.5% on these 2 days. So it's very, very close. And then 2019, this is the January big winners. Let's make sure these numbers are right. Okay, those are good. Just making sure it's collecting all the data it needs to. So in this example, we're actually up 1.5% when the market is moving up. Our stocks are going to be moving up faster. So I really don't see any advantage to waiting unless I can maybe find something on the 4th, 5th day where it trails off enough to justify sort of waiting 4 or 5 days after the move, but I don't think that's going to happen. So I'm going to dig into these numbers. And then my final step, I think, before I actually get into the trading is going to be essentially, you can see we have 2, 4, 6, 8, 10, 11, 2, 4, 5, 2, 4, 5. So on a good moving market, I'm going to end up with too many stock options, and I want to attempt to narrow the field a little bit so that I don't have 5 options every day and I'm upset because I can't get action on all of them. So a couple ideas I had was to pull out some underliers, like let's pull out the ones that are under 4%. Maybe they don't perform as well. Let's pull the ones that are extreme, like above 10%, and compare and contrast all of those to see if I can maybe thin my entry point. So for instance, only stocks that are above 4%, or even only stocks that are above 5% but below 10%, for example, on the move. Or maybe I could even shift out some of the low 20 stocks if they're performing less than the others. So I just have to essentially compile all this data together and really dig in. So I'm going to do that now over the next day or so. I don't think I'll get it done. And maybe by the end of the week, I'll have enough information to be comfortable starting trading next week. Just wanted to show you real quick what I'm doing here. I took the December, the big winners that I just completed, and I removed anything less than a 5% gain on the day. And then I'm looking at how that adjusted the numbers. So that brought me up to 1.62 average, and the market average is 0.76, so that bumped me up to 0.86, and I was at 0.63. So by removing anything below 5%, I actually bumped my overall net by about 2.3 or 0.23%. And just looking, it seems to still be 1, 2, 3. There's most days where there'd be at least one stock that would fall within this criteria. So I'm going to do the same for the August and do the same for the January and see where that leaves us. So I've done the same with the August winners and I got a completely different result. So even though the December looked interesting, I increased my numbers by 0.4. When I look at August winners, originally I was up 1.1%, and when I remove anything below 5%, it looks like this. Looks like minus 2.5%. So I actually took a pretty big beating on the stocks that gain more than 5%. So I'll do the same thing on the January ones, but I assume unless I get tremendous results on this one that the under 0.5 is not going to fly. So I've done the same thing with the big winners and it did make an improvement. So this is overall difference of 0.9 and 5.22% on the average. And then we went up to 5.86% and the difference of 1.25. So we managed about a 0.35% increase. So that's interesting. 2 of the 3 options increased it a fairly bit, but then this August one certainly had a different shift. So I wonder if there may be just a handful of outlier stocks that lost significantly. So I'm just going to go through the results in more detail. All right, I'm still tinkering around and I'll show you what I'm doing now just to give you an idea. So I have the big winners December 2018, for example, and now I'm trying to tweak it a bit. So I shifted it to only big winners that were 5% or higher, and then I tried only big winners that had $50 closing prices or higher, and then I did that for all 3 setups and sort of looked for any good results. So when I filtered for 5% plus, I was actually down quite a bit. When I filtered 50 plus, I was actually up almost 4%, but it really reduced the amount of stocks that I had in play. I don't know if there's a few underlying stocks that would have shifted it, because really it was only this one of the 3, 1, 2, 3. This one was actually down 0.5%. This one was actually down a full percent, and this one was up significantly. So I'm going to continue to research. I'm going to play around with numbers and maybe get a few variables that I could add to my setup so that the number of choices I have each day are less than they are now. So I'm going to continue to plug away. So I've run a few more variables, 4% plus, which resulted in no improvement. $20 to $50 only stocks, no improvement. So basically the 50 plus is the only one that's showing an advantage over the original. Why I don't like it is because there's 1 that went up significantly and 2 that went down, relatively speaking. Alright, I think I have it. I filtered for 50 to 100 only, and I came up with 4.05 in January, 1.09 in August, and basically break even, 0.03 loss in December. So compare that to the original numbers, which was a 2.63 average return, and we're getting up to 5.11. And this is above the market, which is pretty fantastic. And I thought the variance was a little bit lower than the 50 plus. So for now, at least for my setup, I will be only buying stocks between $50 and $100. And I think it lessens my options each day to maybe 1 or 2 stocks, if that. And there might be days when none of the stocks trigger it. So I think that is where we're at. And I'm excited. All right, ladies and gentlemen, I think we have found our answers, and it only took about a week or so. So here's where we are. Here's our official rules. Stock prices between 50 and 100. I filtered this primarily. It had a little bit better return, and it also sort of only gave me between like 0 and 2 stocks every day that would actually hit these. So I don't have as much of a choice to be making. Tracking biggest winners of the day, so a minimum of 3.5%. profit that day. Now when stock gets to be above 5% of buy-in, we're going to move our stop loss to break even. We're going to set our stop loss to 5 times average true range. Sell the stock at 15% profit. 3 months max trade time. And no weird stocks. Avoid small volume. Buy next day market open price. So in Brainless, we're just going to buy it right in the morning. We're going to have 7 stocks max in play, $20,000 per stock. And if the stock comes back on the list again, like if it gets triggered again, we're already in, we're just going to ignore it. We're not going to like buy more or anything like that. So that's where we're at. And now I'm going to actually look to see if we have any stocks, and I'll make a new video about that if there are.
Yes, indeed.